As we know, the original calibration of the Risk Factor Eligibility Test risked hindering FRTB achieving its policy objectives. In regard of the bucketing approach, I know that you had several concerns about how it was originally formulated. Can you elaborate a little bit on that?
So, the Risk Factor Eligibility Test, as of March 2018, introduced a methodology by which instruments are grouped together for the purpose of conducting this test. In order to understand how it behaved, the first thing we did was take an example of the US corporate bond market in 2018 and use that as our example. As we undertook the analysis, we identified that at the short maturity of the credit curve, we ended up with a very low pass rate. In fact, for 0 to 6 months and 6 to 12 months, we end up with a 0% pass rate. So effectively, it's almost impossible, or actually impossible, to pass the test at short maturities. And this didn't feel as consistent with the policy objectives. So this was a big surprise to us. We didn't expect that to be the case and investigated further. If we take the example of a particular bond, one of the ones we looked at was American Express. If we look at their issues, they trade relatively frequently. They're actually quite liquid bonds. So if we take an example of a bond that's trading daily and think about what happens to it, this bond, as it trades, has a fixed maturity. So each day the remaining maturity decreases. And as the remaining maturity decreases, it gets allocated to different buckets. And so the consequence of that is, in combination with needing at least one observation per month, you see a decrease in terms of the buckets get allocated to. So initially it might get allocated, for example, to the 6 to 12 month bucket, then over time gets allocated to the 0 to 6 month bucket. And it's that switch that means even though individual bonds are trading actively, a given risk factor can't trade every month for the full year. So this was a major concern, and we thought it needed to be raised to the industry more broadly.
How did the regulators respond to these insights?
So in January 2019, we saw the new version of the FRTB text finalised. When we take a look into that text, we see two key changes. The first is that the regulatory bucketing approach is defined in a simpler way. Each of the buckets is effectively longer, and there are fewer buckets. This improves the pass rate. The second change we see is specific to the bond market, and here there's additional flexibility how bonds are mapped to individual risk factors.